All right, welcome, welcome. Thanks everybody for joining us. Ken Corse here from Strongbrook, and happy to introduce our guest for tonight, and really part of our effort, like we talked about during the PSA Academy, for those of you who were able to stick around with us. We wanted to bring out in front a lot of the services that many of you as PSAs are just getting familiar with or just getting to know. And one of the big offerings that we have, we're going to cover in detail tonight, what we do with Strongbrook Financial and the benefits that can have for you financially, for your insurance, on the tax side, that goes, well into what we do on the real estate side and beyond. And I got to know Nick while we were doing the PSA Academy, and he's been a great guy to get to know, and I'm excited to bring him here for you tonight and be able to go take a deeper dive into what we do on the financial side. So Nick, are you out there?
I'm here, yeah.
Well, welcome, and I'm going to let you take it away. And just a quick reminder for those of you on the call, I've had you type in your name on the right. Make sure you use the question and answers module. If you have any questions for Nick throughout this call or anything you want to know specifically, use that because we want to cover it in detail. So Nick, take it away. Thank you.
Thanks, Ken. I'm glad to be here tonight. I want to thank Strongbrook for this event, as well as those joining us on the call from around the states, and it's great to spend some time together. I hope it's valuable to you. The starting place I wanted to start today is just with the first slide here. So the presentation is from Strongbrook Financial. I'm Nick Peterson, and Strongbrook Financial is a department within the Strongbrook Group. So we're happy to be part of the power team. My position is department head here at Strongbrook Financial, and we have our offices are right out of the Strongbrook corporate office. So it's pretty exciting, and also this presentation is co-sponsored by Peterson and Associates and CoreCap Advisors. Advisory services are through CoreCap. I've got a disclosure on the next page, and then Peterson and Associates has provided us with some tax information, which is also one of my other full-time jobs. So really, really excited to be together, and I just want to take a moment here and just mention how powerful this slide really is and the foresight that the Strongbrook executives had to bring in the Strongbrook Financial over 2 years ago now and bring that in-house. Just hats off to the Strongbrook leadership. The depth of having these three names on one slide is very, very unique in the industry. Some of the professionals that we have on our staff in Strongbrook Financial Group, we have an estate attorney, we have CPAs, business specialists, life insurance specialists, graduate studies professors, we have career therapists, believe it or not. We do need career therapists when talking about money. Just a really a lot of depth that we bring to the table. We're excited to be part of the team. We love Strongbrook as a wealth building company. Most of us have advanced degrees as well as securities licenses. Almost all of us in the group here can become fiduciaries for our clients. So we're just really excited. Seems like pretty often other real estate groups are trying to figure out how to do things the right way, and sometimes I'll get calls reaching out, and we're just proud to be totally loyal to the Strongbrook family and the PSA, the group that we represent and can work with. So that's a little bit about this first slide here. I feel like this adds immense competitive advantage to those of us who are PSA holders. It adds a lot of depth to the power team. Just some things that are strategic advantages about Strongbrook Financial compared to other groups out there is, and one of the reasons why the executive group wanted to bring in Strongbrook Financial was there's a lot of negative feedback loops that can exist when other financial advisors or tax professionals or attorneys or anything in the mix that maybe they're not as experienced with how the Strongbrook system works for building wealth for people. And so this is one of the big initiatives and benefits of having Strongbrook Financial in-house, is it does lower the negative feedback loops that can exist. I found that consistency in the planning stages will bring about a synergy that you can only have when all the players are unified in fighting for the client's wealth. So that's something that is also a strategic advantage that Strongbrook Financial has for the client base here. One thing that's very important to the Strongbrook executives and me personally is to allow these services to be accessed by anyone who would like to access them within the PSA holder group. And so we've dropped our minimums. The industry standard for the types of services we provide is very, very much substantially higher for the same level of service that we provide, but we can help everybody. Another thing that I was thinking about, the dynamic knowledge base. I mentioned some of the people that we have on staff to help service and serve the clients, to provide as much value as we can to the client base. We just have a dynamic depth that you don't find out in the industry very often as a whole. And that allows us to have superior strategies that we can mix and complement the real estate growth. So in this presentation, some of the things that I know went out there at the PSA Academy was we talked a little bit about our competitive advantages, a little bit about what some of the services we have at Strongbrook Financial. Another thing too that was brought up was what are some of the strategies that the wealthy use. So in formulating this presentation, this webinar today, I really want to provide it, if you're taking some time out of your schedule, I want to make this as valuable as I possibly can for those who are listening in on the call. And those are some of the areas that I wanted to hit, the strategic advantages that we have, what are the wealthy using, and really how can we help you wherever you are. So in some cases, this presentation can be a little bit general, but some of the trends that we're seeing are that way. So if you do want to get more specific, it is hard for my position on a webinar like this to get exceptionally specific and to give specific recommendations, but I will try to give as much value as I can here. Now, of course, we do have the disclosure that we're required to put here. You're welcome to read through this. This is my meeting outline. Now, some people have said, well, what does Strongbrook Financial do? What is it that you do? And there's a story that comes to my mind that I shared at the PSA Academy from my personal life. Those who know me very well know that I'm a big believer in the outdoors. I feel like a lot of individuals and entities, they throw money at causes that they believe in. Well, I choose to throw time because I think time is more valuable than money. So I throw my time at causes and things that I believe in. And one of those things that I really, really believe in is the National Park Service. So I volunteer with the Park Service personally, and I spend a lot of time in the mountains and outdoors. And I feel like it gives me a lot of clarity in life. Well, one of the stories that I always think about when I want to talk about Strongbrook Financial and what we do is there's this time where I was in the mountains with some friends. And for those of you who have heard this story, I apologize for the repeat, but it does bear repeating. The three of us were camping. We had a tent and a fire in the fire pit and just having a great evening in the mountains. Well, after a little while at nighttime, we were camping in Utah. And there are bears and things in Utah and mountain lions and the like. But one of my friends just disappears. I just look over and he's just not there. Well, I mean, that happens in the mountains, but not often. So I kind of figured that maybe he went to his tent to go to sleep early or something. So I went over to his tent and unzipped the tent flap. Went in there, and sure enough, there was something in his sleeping bag moving around. And I thought, okay, well, I'm going to take advantage of the situation, and I'm going to surprise my good friend while he's sleeping. So I go over to where he is as quietly as I can, and I lift up his sleeping bag to startle him, and in that very, very moment, instead of seeing my good friend, I found a skunk inside of my friend's sleeping bag. And you can imagine how surprised I was to see the skunk. Well, you know how skunks work, the tail flips up and they just get ready to spray. So me, being in my wisdom, I decided it would be a great idea to put his sleeping bag back over the skunk's tail. And, you know, poor guy, I don't know if you've ever tried camping with a skunk in your tent or your sleeping bag before, but it's not a pleasant experience. And so the immensity of surprise that I had in that moment, I think can translate very well to what most individuals and entities are experiencing in the financial world. And what a good advisor system does is to try to smooth out the ride as much as possible. We want to know about the surprises, okay, and we don't want immense financial shock in somebody's experience. So if I could just narrow it down to what Strongbrook Financial does, and I'd say it's just that, is we want to avoid the skunks, okay? We've been there, we've done that. Let's make this a smooth, easy, predictable pattern where we don't have to come across those big surprises in what we're doing. So I'd say that's, you know, bird's eye view. What do? We avoid the skunks, okay? Now there's a lot of other ways of saying that, but for me personally, that's how I relate really well with the message of Strongbrook Financial. So, excuse me. So thanks for Strongbrook for allowing for this webinar. Let's dive into my outline here. So I'm a very organized person. Sometimes I get off on tangents, but this is the flow of the meeting I hope to have today. We've got power of knowing, power of personal choice and accountability, power of losses, power of liquidity, power of taxes, and powerful solutions. There's a lot of power going on here. Now, I know that Ken mentioned there's a chat feature here on the webinar. If you do have a question, Ken, just interrupt me. I don't see that chat feature. So if there is a question along the way, feel free to ask it, and I'll do my best at answering it. If you don't have questions along the way, I'll try to make sure that we have some time towards the end for a few questions as well. So my hope here is to give you as much value as possible, show you the strategic advantage, and tell you what the wealthy are doing in hopes that that will add value to you. So let's go ahead and start with power of knowing. And there's this term that I coined. I haven't heard anymore, and I feel like it is true to the core of what I believe. And the phrase is this: to act can only achieve fool's luck. Try saying that again. To act without knowing can only achieve fool's luck. Inverse is inaction with knowing, the most you can achieve is being a fool. So inaction with knowing, the most you can achieve is being a fool. So power of knowing is an important piece, and you know, here's kind of a snapshot of what I do on my weekends. That's me in the picture there. And I love being outside and clarity of mind. And if I could really hone in on what I think one of the major financial struggles of our time is I would say it's lack of knowing. Now, a lot of people will assume what I'm talking about here is maybe power is knowledge, or using knowledge as an excuse for inaction. No, that's not what I'm saying here. I want to drill down real specific and let you know what I'm saying is power of knowing where you're at. I feel like that's imperative in most individuals and entities that I talk to do not know that. And what they do know and what they do have crystal clear in their minds is where they're heading. They have this perfect picture of where they're going to be and how they're going to get there. and what it smells like, what it looks like, what it feels like to have that level of success. And they overlook where they are personally currently. And I feel like there's a disconnect. I feel like anyone that tries to achieve these goals without knowing where they're at, they have a harder time accomplishing what they're hoping to. So one of the things that at Strongbrook Financial we really like to do is we like to do a financial review. And this is something that we offer complimentary to the client base here at Strongbrook. And we'll dive deep into everything that we can. Cost, we'll dive deep into tax strategy, investment strategy, we'll dive deep into asset class strategy, human capital maximization strategy. We'll just dive in and try to figure out where we are currently to know how we're going to get to where we're going. Now let me help illustrate this a little bit different here. When I'm dealing with a client or working with a client or helping a client, me personally, and I sit down with a client, there's certain things that I watch very, very closely. The first one is I will ask the question almost every time in the first meeting. I will ask, what is your discretionary income? Now, sometimes clients will not know what discretionary means. And so then I'll use disposable income. And sometimes they don't understand what disposable income means. And I'll say, without changing lifestyle, what is there in excess? Okay, so that's what I'm talking about. And I'll watch the reaction. I'll watch how they position themselves. If it's a client that's married filing jointly on their tax returns, I'll have both partners there in the meeting, and I'll watch how they interact with each other. And I can tell a whole lot by the amount of time delay it takes to answer that question. Is it a deficit every month? Is it a positive? Is it break even? What is our discretionary income? So I'd get really, really good at answering that question and taking a personal inventory ongoing. Okay, here's another one that sometimes, this one I don't ask every time, but if I have a more sophisticated client, I'll ask, what is your net worth? Okay, now if we go back to some of my objectives for this meeting, one of them is I wanted to point out as we go, what are the wealthy doing? Well, here's a good point where I can interject for a minute on what I am seeing the wealthy of our country doing. One thing that they are doing ongoing is they are doing the same thing that causes businesses to be successful, but they're doing it personally. So I did an inventory of the great businesses of the United States and multinational and international companies, and the trend I found was that the most successful, the top 2% of companies maintain a balance sheet for the which they're accountable for, okay? Now, a balance sheet is a snapshot in time. It's not a budget. It's not a profit and loss statement. It's not an income statement, cash flow statement. It is a snapshot of at a given point, assets, liabilities, and equity. Now, instead of equity, we'll put net worth there. So I was thinking, well, is this the same that's true on the company level? Is it also true on the individual level? So we inventoried our clients, and we found that the top 2% wealthiest clients are also preparing a balance sheet that they hold themselves accountable to someone or something off of what's on the balance sheet. Okay, so if you want a secret of what the wealthy are doing, the top 2% are maintaining a balance sheet. Now, it doesn't have to be something complex. On the one that I do, the easiest program I found is Excel, an Excel spreadsheet. Now, I'm not promoting a certain program. That's just what I use. And I found all I need is the month on the top row, indicating the different columns each month, and I put my balances in of where my assets are. And I can find my net worth every single month on the 1st. So I'm pretty excited because tomorrow is the 1st. And so me and my spouse, we get to go through that exercise. And as a couple, we focus on our goals. Now, a lot of individuals will do budgeting. Now, budgeting is another way to be accountable, but we've found that about 50% of families budget, and most of that 50% is not held accountable. And so I wouldn't say that's something that's unique to just the wealthy. I would say that's something unique to a prudent financial family, but it's not something unique to the wealthy, whereas I feel a balance sheet maintained ongoing is something that I'm finding is unique to the wealthy. So I hope that that's a gold nugget that you can take with you. In moving on this webinar, another thing I want to is I believe how many people are not being accountable for things. You know, just the other day I was standing in line at a pharmacy, and the person in front of me was yelling at the pharmacist, and they had said something to the effect of, "Do you mean it's my responsibility to know the medications I take?" And and she was frustrated at the pharmacist for filling the order that she brought, and she hadn't known what it was that she was even filling. And you know, I just think that it's a problem that's rampant out there. And so one thing that I picked up, I went to the AICPA conference on investing. I go every single year, and the one line that I really get the first time I went was this quote here. So to save you time and effort from going to that AICPA conference, here's the best thing that you could learn from that training. It's this: recurring income, and I'm just reading right off the slide, recurring income only leads to financial independence if higher than expenses. Now let that concept sink in for a minute. It almost seems like common sense. Recurring income only leads to financial independence if higher than expenses. So let me break that down a little bit. Strongbrook is a wealth building company. Strongbrook is very good at what it does for clients. But if this is a true quote, and I believe it is, then it seems like the wealth building company only has half the battle, building wealth. The client then has the other half, which is the expenses. So if a client has hired a wealth builder, and the wealth builder is building wealth, but the client is just spending that wealth as it's being built ongoing, wealth will never be achieved. Okay, that's the point here. And let me just hit this home. We talk about you know, power of knowing, and I believe those principles to be true. And if they are, then it should follow that becoming wealthy isn't necessarily about how much someone makes in money, but is more about how much we choose or how we choose to act with what we are given. So to illustrate this well, a lot of individuals will see somebody who makes a lot of money and assume that person is wealthy. And I'm finding that is not the case. Some of the highest earners that I know of and that I have stewardship with, they are very, very poor people. And one example I can think of is someone who makes an exuberant amount of money every year, but somehow finds a way to spend more than is earned. And that person is held captive by finances and is nowhere close to being financially independent. Whereas to the average person looking at that income, the average person would say, surely that amount of income would bring about financial independence. But in that case, that is just not true. Another example is I was working with a single mother recently. Well, it's been a few months now. And you know, just heart-wrenching. the story of this individual, and she would be considered a low-income earner. But after leaving my office and knowing how that she can provide for her son to have a higher education, he left weeping to know that her son could have a better chance and a shot than she had. And because of how responsible she was with her outflows, she was so much wealthier than the first example I explained. Okay, so earnings doesn't necessarily equate to wealth. So so to hit on this, accountability is a true principle. It's one of those, I don't know exactly how to phrase this correctly, but it's a universally true principle. Those who are accountable to someone or something to some degree perform better than those who don't. Okay, and that is a principle the wealthy have figured out. And the sooner that we accept that, the better. And I'm finding there's a lot of resistance to this concept of being accountable, but it is totally true. I just right before this meeting, I got off the phone with someone who is trying to figure out their business affairs, and I do a lot of business consulting. And the first thing I said was, you're not holding your partner accountable, and until you do, you will never see the returns you want out of your company. And it was just interesting to listen to the response that I got after saying that, but I promise this is a principle of the wealthy. Here's another concept in the same category. This comes from a book that I enjoy reading from Patrick Kelly. He talks about the landmines of the financial landmines that people step on, and a great book. But this is a concept from that book about how cash can help us be accountable. I won't take the time to read it. Okay, here's another piece that that I find really, really important. So if we're talking about what are the wealthy doing, I would say this is one of the pinpoints of where we should be talking. We've passed the power of knowing. We've passed the power of personal choice and accountability. What's next? Well, now we have this momentum that takes place in our lives as we get really, really focused on what we're doing. Now, I think everyone on the phone has experienced, or on a webinar, has experienced some sort of loss at some point. Now, I don't want to just limit this to financial loss, but we'll loop back in there in a minute. But just think about that loss. Was it loss of income? Was it loss of a job? Was it loss of health? Was it the loss of a life? Okay, think back to a moment where there was some sort of loss and the feelings and the consequences after that moment happened. Okay, losses are very, very powerful. They are so very, very powerful. And if we're not proactive about losses, they can seize our momentum very, very quickly and get us extremely sidetracked. Okay, so here's one thing that the wealthy understand. They understand that with money, it's the same way. Okay, those same feelings, the same sidetrackedness, everything that comes with losses in the real world also become true financially. Okay, so that's an interesting concept. So I have this infographic to try to demonstrate the difference between arithmetic mean and geometric mean. Okay, and what brokers like to show is arithmetic mean. So let me just walk you through this this image here. Year one, we put $100,000 hypothetically for illustration purposes only. We put $100,000 into an account and it earns 5%. Year two, 10%. Year three, 5%. Year four, we lose 30%. That may sound familiar to some of us on the phone. Year five, 10%. Okay, I've been very conservative with the numbers here. But if you add up all those percentages, you get to 0. And so if arithmetically we were saying, okay, we take the average earnings over the 5 years, we divide by 5, our average earnings should be 0%. So if we put in $100,000, we should still have $100,000. Unfortunately, losses have more power than positives. Interesting, huh? It's true with real life, but it's also true with money. So you add up all these and you do the actual calculations, your return is closer to $93,000. So you lost, even though you had 0% return over the time period, you lost money. It is amazing how that works. So let me tell you another concept that I'm finding true with the wealthy. Money never was the limited resource. We as people, for some reason, have put money in our minds as something that's limited. The true limited resource is time, and the wealthy understand this. And so when it comes to money, right, we only have one of every moment, but when it comes to money, if we only have a given time period, can we really afford to have the losses? In fact, we'd be willing to take less positives if we could avoid the losses. Okay? If we could have some positive, what we actually do is we give ourselves back time by avoiding losses. So let me demonstrate that. Let's say we had a large amount of money going into 2008 in the financial crash. And maybe just now, 5 or 6 or however many years it took, we finally broke even to where we had the same balance now as we did before the crash. Think of all those years that were lost. Whereas if we could have minimized the loss in 2008 or 2001 or any crash, it doesn't have to be 2008, any crash, if we limit those losses, we get our time back. We don't have to fight to make up our time. Okay? This is a very, very, very powerful thing to master and understand. This next slide here, I won't dive in too much to, we could talk about the modern portfolio theory and how I believe it's outdated. But just the idea of holding on for the ride, I don't think that is in anyone's best interest anymore. Here's something else that I've noticed is common. If you take an inventory of your assets, but also if you take a look at the wealthy, not the people who say they're wealthy, but the ones who actually are. Power of liquidity. You know, those, and by liquidity I mean a liquid, when you talk about a liquid asset, it's easily accessible without penalties or fees. Okay, that's what I mean by liquidity. You still have control over your own money. Okay, the wealthy, they have a lot of liquidity, and so do the most successful companies. Okay, liquidity does very interesting things. When I look at a client who has a lot of liquidity, they're happier, they have better relationships. This is some that chip over their shoulder, and they're just in general. But here's something else, okay, and this is something that I believe the wealthy understand. They have higher returns and they have lower losses. Now, I'm not just talking about in their accounts, okay? Let's talk more broad. So a lot of liquidity. Let's say we have somebody who has mastered the power of losses. They've mastered the power of knowing. They've mastered the power of personal choice and accountability. And here we are right now. They've mastered the power of liquidity. And they walk into a year like 2008 and 2009 where their liquidity stayed relatively high. But there's a huge sell-off in the real estate market. How much higher of a return do you think that individual had, because they had liquidity and they've mastered that, because they could take advantage of a better opportunity that most people couldn't have taken advantage of. We see this all the time in the business world, in the financial world, across the board. Liquidity is very, very powerful. The ability to wait for the right moment. Okay? How about not suffering as many losses? Let's talk about expenses, for example. I met someone who had a massive health crisis right in the middle of their young life, and the total out of pocket for this young father was about $75,000. And I remember hearing the story here, and the billing collection person at the hospital, before he was discharged, and here he was on the deathbed. He didn't end up dying, but this collector came in and just said, "Hey, we need to collect this, that, the other." And he said, "Hey, just wait a minute. If I get out of here before I leave, I'll stop by your office and we'll square up." And it was interesting because when he went to that office, when he finally was discharged from the hospital, the bills, they were able to negotiate because he had liquidity. He could pay cash before he left the hospital. He paid $25,000. Okay, I mean, that's amazing. That's 66% less expense because he had liquidity right then. Okay, so it works on both sides of the spectrum. It works on capturing increase, but it also works on paying less. So liquidity is a very, very important principle. Now, just moving along here on our on our presentation, I want to get through all the points here. Taxes. Boy, that's kind of like a swear word this time of year. You know, we're pretty busy at the CPA office right now. But honestly, this is a real thing. When you talk about wealth eroders, power of taxes, these taxes, the laws keep changing. But here's a graph that is a little outdated. The numbers look worse now than when they did when we created this graph. But here's the deal. That top line, that's the top tax bracket. The shaded portion is debt to GDP. Okay, so think about our country's debt. Okay, debt to GDP ratio. And as debt rises, look there, like 1944 right in there. Debt rose, taxes, they followed suit. Debt dropped, but we're in the type of country that doesn't like lowering taxes. So taxes delayed a while until finally they dropped. Look at that, they dropped to the 60% range. Man, nowadays if we saw 60%, we wouldn't know what to do with ourselves. But that was something that we experienced in the history of our country. We actually did have a 94% federal tax at one point. And it wasn't just for the high income earners. This was for very, I mean, it was the high income tax bracket, but that was a fairly low dollar amount. So as you can see, debt has increased, especially now that we're above 100% debt to GDP. Now we are. Debt keeps going up. Think to yourself where taxes are going. We need some sort of tax strategy to offset where taxes are headed. Pretty powerful graph right there. Here's something interesting. This was passed, and a lot of people didn't realize this passed, and there's even things that are out there that are worse now. So we have new tax, new stealth tax, this new investment tax bracket altogether. They just invented a new bracket. We've got the surtaxes that came on. Trusts are getting taxed differently now. Just a lot of things that are changing for the negative. I include this next slide with full confidence that it's a sensitive, very sensitive topic, but it's not known and most accounting firms aren't addressing this because most accounting firms are not proactive. But there's something that I've termed the widow's penalty. Okay, where if you have a spouse pass, the surviving spouse is discriminated in the tax codes. So right here is just generic information. I didn't place information on these, but here's a tax return, okay? And I just kept the numbers the same before the passing and then after the passing. So the right-hand side is when, in this case, Sue Dummy was alone, okay? And you see how it all pans out, but everything is really the same. But before and after, okay, the numbers as they drop down on the tax return, there's a 62% increase in tax liability post-death. Okay, this is something that catches a lot of people by surprise. And again, I post this slide with full confidence that that I need to be very sensitive, because when there's a passing, it's a very, very sensitive thing. But we should be addressing these types of issues proactively for the families and those who are trying to build wealth. Power of taxes. I think everybody, if we could pick one bad guy, we would say it's got to be the IRS. You know, it just seems like that's a universal enemy. And in fact, the IRS isn't the problem. They just enforce the problem. So the taxes, we can all agree, are a major wealth eroder. Okay, this picture right here just gets me every time. So that's my little daughter. These are my two girls, my wife and my little daughter. And you know, when I think about solutions, I have them in mind. What is there that we have to navigate some of these issues that I've talked about, these major problems? Now honestly, some of these are internal, right? Power of knowing, power of personal choice and accountability. Some of those are internal, and we can arrive at those conclusions. Some are external. Some we need a company like Strongbrook to help teach us what are some best practices to help us grow and to build. Now, real estate at its core is one of the strategies that we like to use at Strongbrook. And there's a lot of different strategies within real estate, and Strongbrook's very, very narrow for a reason on the way that they approach real estate investing. And there's lots of benefits to real estate. We've got great tax advantages. We've got a great distribution model. We've got great ability to leverage the right way. There's a lot of things with real estate, okay, that Strongbrook can help us identify to overcome these problems that we've talked about. But really, the truth is, a blended approach typically is the best solution. Okay, so if we have the fortune of knowing Strongbrook, how are there some ways that we can complement and speed up our game plan on where we're headed? What are some complements? We had a guest speaker come into Strongbrook, and I thought she did a phenomenal job at illustrating one of the complements that she uses, which is bank-owned life insurance. Okay, and I think she presented it very, very well in the PSA Academy a couple weeks ago. But there are strategies that can really, really help us gain momentum in achieving the goals we're trying to achieve. So here's some questions that I like asking, and this is golden. When I look at an asset, these are some of the questions that I asked. And it can be any asset, okay? It can also be an expense, okay? I just look at these types of questions. So for those of you who aren't able to see the slides. How liquid is the asset? What is the defense strategy? Can the asset grow? What is the tax strategy? These are things that, they're basic questions. This isn't rocket science here, but this can help us shape where this asset needs to fit in our plan. You know, insurance is an asset class. If we invest like everybody else, we're going to get the same returns like everybody else. So a lot of times clients and other industry professionals that I meet with and collaborate with, they don't understand bank-owned life insurance very well. And I remember having lunch with someone even who was an insurance professional, and they didn't understand how it really works. And I think it's because maybe the industry is not very client-centric. It's more advisor-centric, right? And so we're unsure of the industry as a whole. But here's the thing. If we ask ourselves, what are some good strategies where I can have tax benefits, liquidity, where I can have defense strategy and growth strategies, this could be a great solution where we put funds into a bank-owned life insurance policy or permanent insurance, and I'll just add, structured the appropriate way. We can have great growth that we can have access to relatively quickly for things that we want to pursue. Okay, so this could be an asset class worth checking out that is most of the time overlooked in the traditional industry. Another one that I think a lot of clients are taking advantage of is strategic and tactical management. I think this is a very, very important thing to understand, where instead of talking about, for liquid assets, instead of talking about what kind of return am I going to get, maybe a better question would be, how is my risk going to be managed? And that's exactly what strategic and tactical management does. And so there are programs that we have access to that are very, very tactical in nature, 100% liquid day one, and are fantastic places to put funds from rental income off of real estate, put funds off of the sale of a property, put funds in for emergency fund planning, for college savings planning, to complement the returns in real estate. There's a whole world here where instead of managing based off of returns, we manage based off of risk. And the great thing about that is the returns follow. Okay, so this is something that is available to the Strongbrook clients. Honestly, every situation is totally different in every single client. And the key here is finding the right professionals that you feel comfortable with, that know your situation and can see the angles and can give you good advice. Because every situation is different, and it's important that we find the right professionals. Here at the bottom, I just put a few references. So while we have the slide up, you're welcome to look at these references. I referred to the Tax-Free Retirement, written by Patrick Kelly. He has a second book out too that's very good, and that's a good resource, especially this first book. It's great at avoiding the financial landmines. Another resource here, Ed Swat is one of the, if not the leading IRA expert in the United States. And he has a whole YouTube, it's about 45 minutes long, where he explains the value of insurance. And so just interesting resources that are available that are third party, that are good to look at. So in my hopes here, again, if we can go back to the very beginning, We at Strongbrook Financial want to add as much value to the Strongbrook client base as we possibly can. And what we do is we help the client base and those individuals avoid the skunks in life, okay? Nobody wants that smelly mess. And yet we all seem to be falling into finding more and more skunks in our path. Strongbrook Financial is there to help. Part of this conversation, I wanted to help those understand that there is a depth here that exists that can be accessed here in Strongbrook Financial. I also wanted to point out that there are some great competitive advantages that each of us have access to help us get further and where we want to go. So that's the presentation I had. I did promise that I'd leave some time for some questions, and sure enough, I did. And then I do know that there's that Ken has a sheet or something that if you are interested in meeting one-on-one, whether that's phone or in person, whatever the situation may be, you do have the chance for a complimentary review just from Strongbrook Financial from someone on the staff.
Right, and I just sent it out to everybody on the chat side. I'll send it out for a second time just in case, but that is strongbrookglobal.com/financial-webinar, and that's also where I'm going to place the replay for this call when we're done with that there. So again, strongbrookglobal.com/financial-webinar, financial-webinar. And then that's in the chat as well. All right, so opening up the questions. Harry asks, do you know of any good books on bank-owned insurance?
Great question. My favorite is not the one by Nash that everybody else talks about. My favorite is that Patrick Kelly reference. That is Until I Write One. That one will be my favorite, and that's called Tax-Free Retirement. I like it because he's non-biased, and he also talks about financial problems that people run into. So I find it a very, very practical book on financial health in addition to bank-owned life insurance.
Excellent, and a reminder again, if anybody else has any questions or feedback, use that question and modules answer on the right-hand side of the screen. Just real quick before we break. Claudia asks, is whole life or AUL better for your own banking?
That is a great question, and there's a lot that goes into that answer. The real answer is, that you won't hear from anyone else, is it depends. They both have strengths, they both have weaknesses, depending on the client's needs and the individual and what they're trying to accomplish. Because I've seen both succeed and I've seen both fail, and I think the two biggest variables, the first is the client, but the biggest variable is the advisor and how the policy is structured, which will cause it to succeed or not. And like I had mentioned before, there are a lot of advisor-centric insurance professionals out there that do set these up incorrectly. And that is something that we do also in the review, is we look at existing policies. We have access to a patented third-party think tank that will generate very, very detailed reports on the structure of policies. And so we take the extra mile. And just because the policy may be structured differently with whole life or a VUL or an IUL or a guaranteed life or something, just because it may be structured improperly because the advisor set it up wrong, does not mean the vehicle itself is bad. It just may need some tweaking. So hard to answer that question directly, but that's the best answer I can give you.
Sure. All right, our next question from Dean. He says, for those that are not Excel savvy, do you know of programs that will help with balance sheets?
Great question. There are a lot of softwares out there, free and that you pay for. If you're not Excel savvy, a paper and a pencil can do it just as well. What we want to accomplish here is assets, a list of assets, a list of liabilities, and a net worth, if possible, on a monthly basis. And in that session, too, you want to put your goal for the next month on your ending balances. And so it does not have to be Excel. It could be any other program. Excel is just the best one I've found. Some clients use software packages like QuickBooks, Mint.com. I see used a lot. There's another program called YNAB. But I found that these programs are more difficult than Excel. So if we're having trouble with Excel, I don't think the answer is going to a harder program or a different program. I think the answer is probably let's make it easier, so it's something that we can do. So I just suggest a paper and a pencil, maybe graph paper.
All right, next question. Vaughn asks, do you get access, or how do they get access to the analytical software to compare the approaches, or is that something that they get in the session with you to look that up?
Great question. So I believe you're referring to my comment I just made about the patented platform, the think tank that we use. If that's the case, this is an elite package that some groups across the country, mainly CPAs and attorneys, have access to. It is patented. They're very careful. All the products of international and domestic products that are sold overseas and domestically are in this database. And their goal is to create a fiduciary standard for that industry, and that is it's not a Strongbrook setup. The think tank is out of Florida, but we are very fortunate. I know the CEO very well personally. I've met with him several times, and he has allowed us that that access for Strongbrook clients. So it's not a consumer product. It is an elite advisor product, and it's not even a product. It's just a think tank. So it is something that Strongbrook advisors do have access to.
All right. All right, Nick. Well, I see we've reached the bottom of the hour again, and I wanted to thank you for joining us. And again, share that URL in the chat room right there. I know many of you are interested in getting a one-on-one, getting a review done, asking way more specific questions. I know some of you, there's been a couple of questions on recent calls about specific entity types and how to structure businesses and that kind of thing. That's something I want to bring forward and that we can talk about a bit more in upcoming calls. So, but there's a lot of things that are specific considerations, and Nick, something I know you know well. But again, that's strongbrookglobal.com/financial-webinar. If you want to get an individual session, if you want to get a review, also we'll be posting the replay of this call there as well as soon as that becomes available after this is done tonight, and I get that uploaded for you. So again, that's in the chat, strongbrookglobal.com/financial-webinar. Nick, thanks for joining us tonight again, and we'll bring you back for more specifics and more questions based on the feedback we get from this call and what else we need to cover. So thanks for being here. Appreciate y'all, and see you on the next webinar.
Thank you.